what would a line change be? What are you looking for?
In January, I proposed that the Mag 7 really change its roster, and that was to add Broadcom and ditch Tesla. And I think I feel vindicated by that recently. And the reason for that at the time was not just that Tesla was underperforming. It was that Broadcom captures the whole zeitgeist of the moment right now. It's an AI stock, much more so, even though Tesla may be one more in the future. Broadcom is one in the present.
Broadcom is pretty much giving investors what they wanted, better than a feared software revenue represented by VMware, the bottoming of the non-AI semiconductor revenues, and then, like you said, cherry on top, 10-for-1 stock split, joining the likes of NVIDIA, which is partially, pretty much the main driver for today. The market cap, though, of Broadcom is literally within 10% of surpassing Berkshire, as well as Eli Lilly, too, which is incredible. There is Bank of America in their notes saying, hey, maybe it could even push out Tesla and the Mag 7.
So Nancy Pelosi just bought between 1 million to 5 billion worth of broad call options. She's well known for her trades, and the previous famous trade that she made was the nvidia one that we made a video about back in November 2023. And on that one, she managed to gain year to date $4 million. So now the question that everybody has is whether this Broadcom trade is going to be another huge gain for her. That's what we are going to be discussing in this video. If this is your type of content, like, comment. What do you think of this trade? Is this stock that you would buy, and why? Let's jump into it. I'm sure you've heard the news. First thought?
Yeah, so like Daniel said, we made a video when NVIDIA was $400, when Nancy Pelosi bought her call options on NVIDIA. And now, if we don't consider the split, the stock is at $1,270.
3 times.
So that's a lot. Yeah, 3x. So if you have put in 10,000, you'll be at 30,000 right now. Nancy Pelosi is better than Warren Buffett. We all know that.
But one thing that I should say is that that's actually a reason why you should, watch our videos, right?
Exactly.
Because we see stuff before everybody see them.
Exactly. Broadcom, I'm going to say something. You should stay and watch this video, because what I think everybody's missing about Broadcom is this. Broadcom is NVIDIA without the volatility. Broadcom is a better investment than NVIDIA.
I totally agree with you. And if you don't have time and, you have a lot of things to do, you can just stop the video there and then, just go, because our thought on Broadcom is buy. I mean, just buy it, right? But this is not an investment analysis, an investment advice, sorry, but the company looks really, really good. I mean, we can just dive into it, straight by kind of looking at the financials, right? So first, let's talk about Broadcom's revenue. So on the left side, you can see the revenue. This is from their earnings that just happened a few days ago. The revenue jumped year on year, quarter 2 2023 to quarter 2 2024, from 8.4 billion to 12.5 billion, 43% increase. And that's a big jump. And the revenue is basically broken down into kind of product segments. So they have their semiconductors. So that's what we have here as semi. And then they have their infrastructure software as well. You can see that the semiconductor is the kind of big part of the business. I mean, used to be, right? Because the infrastructure is kind of gaining a lot of growth. And this goes back to what Adair was saying before, that this is NVIDIA without the volatility, because this business has a strong foothold in the semiconductor industry. And if, let's say, AI was to go away today, they are not going to go bankrupt, right? Because they have some stuff to rely on. But basically, to understand, or what we just need to keep from this, revenue grew by 43%, and this whole thing has been driven by AI. And AI brought in around 3.1 billion this quarter alone, and that's 280% growth year on year, which is really, really crazy. On the right hand side, we have the gross profit, and here the gross profit went from 6.1 billion to 7.8 billion. Though in terms of gross margin, there was a slight decline. It's still a very, very good, margin to be made on such a business. Is a really, really good one. Any thoughts or anything to say there?
Yeah, I'm just gonna, drill a little bit into the infrastructure software and the semiconductor segment of the company. When we are talking about chip or semiconductor stocks, this is one of those stocks that is extremely well diversified based on the type of product that they are selling.
Okay.
When you look at a company like nvidia, it is very concentrated around GPUs and AI, right? But when you think about electronic, just think Broadcom. Because I don't think today there is a product that has any electronic in it that doesn't have any Broadcom parts. I can literally say Broadcom runs the world. Even if you are using a product, if it's a microwave that you're using, and this microwave for some reason talks to the internet, during that communication, there are Broadcom parts that are involved. This is a very, very strategic chip manufacturer. And the fact that they are adding software to it because they have acquired VMware is a whole game changer. This is just gonna make sure that they grow their business. The business is more diversified. That means is not fragile. If there's a turn in the economy, it's not gonna fall. If AI ended up being, a hype, it's not gonna fall because people are still going to use their product. And when we talk about their product, I can start by listing a couple of them. One of their product is your smartphone, for example, the touch screen on your smartphone. Instead of making the touch screen, they make the sensors that detect your touch on the screen. The sensors that takes your input on the screen and send it to a processor to determine where you are touching the screen, what location of the screen is being touched. All that stuff is never going away. Think of all the touchscreens in the world. Most of them use Broadcom controllers. Networking. When we talk about the internet, from the server to your router at home, to your car using a modem, to your phone using a radio frequency, to the army using specialized radio frequency devices, all of that, when we are talking about converting analog signal, meaning radio frequency waves, to digital signal, Broadcom is there. Everything. Broadcom is good at signal processing, turning signal from one version analog to digital. Talk about storage. When you talk about hard drive, whether solid state hard drive or mechanical hard drive, Broadcom just acquired Gateway. Gateway used to make a hard drive. Didn't acquire the hard drive business. They acquired the hard drive system on chip business. That means the controller part of that business. That's what they acquired. That means that these hard drives, when you talk about mechanical hard drive, those disks in the hard drive, they turn at a certain speed and they have a certain way of reading the information and sending it to wherever place they need to go. They made sure they controlled that. So they are not talking about the product itself. They are talking about the middle part of the product. That means that the bridge between the product and the rest of the world. That's where they are placing themselves. When we talk about servers, edge computing, cloud, and they also have some IP licensing as part of their product, self-driving cars, electric cars, which is all electronic, is all Broadcom. So the business, as far as chip is concerned, they made sure they have a big presence in all the different areas of the chip market.
Yeah, even in data centers management, they seem to be there as well. But yeah, that's a really, really good explanation. And the semiconductor kind of business as well is very profitable for them. The semiconductors gross margin is 67%, and the infrastructure software one is the 88%. So I think I have a question for you here, beside the explanation that you just gave on the product. Why the sudden AI growth came just now? Why didn't that come, when NVIDIA started growing, meaning last year?
The way Broadcom operates is that it tries to be the middleman in every situation. Currently, from my research, they are currently building chips so that people can easily interface or connect multiple GPUs together. This is a small market, right? But again, they don't want to be the main people. They always want to be the middlemen. They always want to provide the chip for the middle communication between devices, basically. And right now, the way people are doing that is they can go to NVIDIA, and NVIDIA has its own proprietary solution called InfiniBand for networking, which is a large-scale bandwidth networking product that allows you to connect multiple GPUs. But this is not a standard in the industry. There is normal networking devices that all these data centers use now. Why throw them away and implement a brand new one? So Broadcom is helping people build this custom system on chip GPU. They are building, like I said, the AI network workload, because these AI workloads consume a lot of data, they consume a lot of bandwidth, and data that has to circulate between multiple devices or multiple GPUs, multiple computers, and you need a big bandwidth and big memory for that. If you don't have this already built chip, you have to put so many systems together to accomplish this same thing. So that's why people are going to Broadcom, so that instead of building or configuring multiple computers, multiple routers, multiple switches, just give us a specialized chip that can kind of do all this. This is what explains the growth in the AI.
So that's the whole custom AI chips thing that we are talking about. So the AI,
Right.
the chip that they are building for the custom one that they are building for other companies is not like, there is no standard for that on the market, and they are basically building something that will kind of link a lot of systems together, right?
Right. So I'm going to read a small quote as part of the earning transcript. So I ask our tool here, what are the customer accelerators that Broadcom is building? The explanation is, customer accelerators are specialized chip designed to handle specific complex AI workload. They are similar to GPUs, but are tailored for particular tasks and often used by selective hyperscalers. These accelerators come with a large amount of high bandwidth memory, HBM, and are highly profitable due to their scale and specialized nature. So we can actually compare this to the new startup that came out a couple of weeks ago called Etch. They were launching their own custom AI chip, which was specialized. They are referring to it as ASIC, application specific integrated circuit, which will be able to handle LLM workload only. It's just like the other video we made about Grok, the AI chip as well. So Broadcom is also a competitor to these two startups.
Continuing on the financial, there is one last thing that I wanted to kind of share, which is about their operating income. Operating income meaning their revenue minus their operating expenses, basically all the cost they spend, or the money that they spend to run the business, right? So here, 2023 and quarter 2 2024, there was a slight decline. So it went from 4 billion to 3 billion. And the main reason for this was all their M&As that they've been doing. So because of the M&A, their SG&A doubled. The R&D cost doubled. They had to pay some restructuring fees and etc. Otherwise, the company is financially very, very healthy. They have a lot of cash on their balance sheet as well. They have, at the end of quarter 2, 9.8 billion on their balance sheet, which is not bad for the company of their size. And very, very little debt as well. So financially, really, the company is doing really, really great. And the things that you explain as well put them in a very good positioning in terms of how they have like a very stable semiconductor business in which they have foothold in all type of industries, and on top of that they are building stuff for the kind of AI growth, which is driving the growth of the company.
And I don't know what else to add to that, because I'm trying to find holes in this company. Maybe their debt level, to me, I feel like it's still a little bit high right now. I think the company has 74 billion of gross debt. 48 billion of that is fixed rate. 28 billion of that is floating rate. They do have almost $10 billion in cash, which is good. I don't like it, but it's not too bad because most of it is a fixed rate debt. So they have a lot of control over that.
Yeah, for me, I would say not the issue, but the slight worry about Broadcom is about their M&A hungry kind of attitude. Because if you look at the company's history, in the past 10 to 20 years, they've made more than 50 acquisitions. They've been very, very, very acquisition kind of focus, any kind of growth that they wanted to kind of do. It is always good to make, acquisition, because that helps you in penetrating markets very well. But at the same time, it brings a lot of kind of culture clash. And, after the acquisition, you have to merge the companies
Yep.
that you acquired, and that can create a lot of problem. But so far, they've been quite good in doing this. The kind of last acquisition that they made was the VMware one, which actually helped them in actually boosting their revenue again. They gained like quite a lot of revenue from there, and their acquisition has been quite strategic as well, because they've been acquiring companies that will help them in gaining like a competitive advantage or something
Yep.
that they don't have. So the VMware one, for example, has been helping them quite a lot. Distribution side of things as well, where they are leveraging VMware kind of customer base and distributors to really sell their product, which is really good for them. So for me, that would be the only kind of worry, and their relationship with like private equities, because they're in terms of like their background, the
Yep.
company, after making like all those 50 acquisitions in 2015, they were acquired as well by another company, and
Right.
that company was backed by KKR, which is like one of the largest private equities. After that, KKR kind of reduced their share before they went public and stuff. So, and in February this year, KKR just bought another unit from them. That whole relationship is a little bit weird for me, but otherwise, I think the future is bright.
Yeah, I will say as the same as well, because you did mention the VMware acquisition. Just to put it in perspective, VMware contributed 2.7 billion of revenue this quarter to Broadcom, and that is approximately 50% of their software business. Just buy a company and it contributes 50% of big segment of your business is pretty huge. I've seen this before. Salesforce has done this for the longest time, where they grow their revenue and they grow the company by acquisition. In this specific case, I like the way they are going about it, because they don't go and buy the biggest players. They buy the strategic players. And when you think about strategy, it's not always to be in front, but being in the middle is actually more strategic. It's more strategic than you'll think. And if you look at the acquisition, they want to maintain that, where they always play the middleman. That means that I am going to be the one who provides you the device to connect other devices together. And I think that is a good play, because you are never going away. If you look at the way their revenue is distributed by geography, I think 38% of their revenue is coming from North America. Asia is 50%. That makes sense, because that's where most of the electronics get made, right?
Yep.
And EU and the rest of the world is about 12%. When we are looking at risk, one of the things they cited is geopolitical conflicts and stuff like that, new tariffs and stuff like that is going on in US right now. Those are the risk, but this company is so essential to any sort of electronic that it will be foolish to start putting tariff on those, because just allowing the US to lose a leadership role in this market will not be great for the United States.
Yeah, and them having a very strong revenue from Asia as well is due to the fact that the company that bought Broadcom, AVGO or AVGO Technologies, I'm not sure how they pronounce it, is headquartered in Singapore.
Right.
That's like one of the reasons as well. Coming back to Nancy Pelosi's trade, one thing that is very important is it's a stock split that was announced in their Q2 earnings. And this split in general, this is a topic that I've been a little bit curious about, and I went back in history to see how this usually impacts stock, right? Because we see nvidia did it this year. Before that, we saw Walmart did it as well. Chipotle did it in March of this year as well. And let me just share this thing. This is a chart that was from a research or a study from the Bank of America, and basically they are comparing a stock that did a split, so a 1 to 10 split generally, versus the S&P returns. The light blue is the stock split, and then the S&P 500 is the dark blue. No matter what the economic situation is, the stock that was split makes usually twice or even more what the S&P 500 is giving you in kind of annual return. If you take the first bars, for example, when the inflation was falling, the next year that follows the one that the stock was split, the stock made 26%, and then the S&P 500 made 14%. When the economy was strong in the 1990s, same, 35.8 versus 18. When the economy was down in the 2000s, 2007, 2008, -1 versus 9.5. And I think this is something that Nancy Pelosi knows really well. And that's actually one of the reasons why I believe she jumped on the trade.
I think that's a fair point. Yes, the stock split is great and everything. Just to add to it, it is a good company, right? The performance of the stock over the last 5 years is that the stock for every year has doubled. Basically, the market cap of the stock has doubled for every year. The last 5 years, the stock is up 500%. This year alone is up about, year to date, is up about 56%. Last year is about 100%. So the stock has really performed well over time. This is one of those stocks that I think, although a lot of people are saying is pretty expensive because of the PE ratio compared to other similar players like Qualcomm. But again, Qualcomm is a less diversified compared to Broadcom. I think this stock is going to easily be a $1 trillion market cap.
Okay. Can I take that as your conclusion?
Yes.
Basically aligning on this, we've talked about everything regarding the business. They are very, very well positioned. They have a strong semiconductor business. And then on top of that, they have the AI growth that they are leveraging. They have custom AI chips that they are making. And the future looks really, really bright for this, for this company. And the analyst, the price target that they placed on their stock now is $2,000, while it's trading now at 1,700. So it's a buy.
Again, not financial advice. Do your own research always. And if you want to do your own research, ask charlie.ai and do your own research using AI. Use the AI, digest your 10Q, 10K earning calls. And if you like this kind of content, always like the video, subscribe, share your comments about the video. Thank you.